How much due diligence does your bank or groups that you worked with before perform on a company? And typically, what's the time frame? So, if, for example, if I were a company and I
Mhm.
was trying to raise $10 million and I wanted to secure a $2 or $3 million line of credit in
Mhm.
addition to the raise, what time frame, what kind of information do you typically look for?
It's not quite as robust as what the venture capitalists will ask for.
Mm-hmm.
And since most of that work has already been done, we try to piggyback off of that, right?
Mm-hmm.
So, kind of soup to nuts from being introduced to a client or prospective client to formalizing and getting a loan in place is probably about a 60-day process.
Mm-hmm.
Personally, for us at customers, we like to do most of our due diligence up front. And I guess what I mean by that is we want to talk to the investors up front because when we issue a term sheet, that's something that we're going to live up to, barring some unforeseen kind
Mm-hmm.
of oddball circumstance or something happening in the marketplace. So some investors don't like to talk to lenders until such time of like, okay, we've selected you, now we'll talk to you. Now, we like to do it in the reverse of that, which I think makes a lot of sense because that way there are no surprises. We learn what the investors are looking for, and so oftentimes we'll glean maybe some prospective deal points that are important to the investor that we hadn't heard from the company. So
Mm-hmm.
we do all of that up front. So once we issue a term sheet, it's really a fairly quick process from there to get it approved.